If you're thinking about buying a mobile home in California, there are 5 things that will blindside you unless nobody tells you first. And that's what this video is all about. What it is you're really buying, how the financing actually works, how the park structure can change everything, what inspections need to cover, and what the insurance might cost you. Now I'm going to walk you through all 5 and a little bit more so you can go in with your eyes wide open. So here's the core idea of the video. A mobile or manufactured home in California in a rental park is usually classified as personal property, not real estate. So like a house or a condo, that's real property. But a mobile home in a mobile home rental park, that's personal property. The same categories like a boat or an RV or a car, unless it's on a permanent foundation on land that you own. And you have also the paperwork filed that converts that to real property. That one distinction of personal versus real property is why the financing, the insurance, and taxes all work differently than most buyers expect. So before you get attached to the home, ask this question directly. Is the home titled as real property or personal property? Try and get that answer in writing, but if not, a verbal is okay. You see, most agents just want to sell you the home. Some do their homework and they're great. Others, they don't know any better. But a good lender will treat you like this is a partnership. And so they're going to look out for you a little bit more because they want to make sure that this is done right. So they might be able to walk you through exactly what kind of home it is you're actually buying. So here's a real example. A client that I helped recently bought an older mobile home in a park where they actually owned the land underneath it. It wasn't a rented space. They assumed that that meant that they were going to get a real estate loan, but it didn't. They didn't. The home was built before June of 1976, which means that they still had to get a real estate, a personal property mobile home loan. So it's very important to check that the home that you're looking at has this label. Now they're blue or red, depending on the year, but basically you're looking at any home built after June 15 of 1976 carries a HUD certification label. That's typically red on the newer ones, blue on the older ones. And without that label, most conventional lenders, FHA, VA, will not fund on the loan, no matter who owns the land. Land ownership is a good sign, but it's not a guarantee. The age and the certifications of the structure can override it. So it's sometimes good to check for that label, but they can be painted over or removed as well, just to let you know. So because most mobile homes are personal property, they don't qualify for the standard mortgage. They get what's called a chattel loan, and that's a personal property loan. That's basically the same kind of loan as a boat or RV or car. Only a small number of lenders specialize in these kind of loans. So there are far less competition, which competition, as you know, drives rates down. So like a condo or house loan has a lot of lenders competing for the business. But a mobile home loan runs a good 2 to 3, maybe even percent higher than a comparable house or condo. Typically, the closing costs are also higher as a percentage of the price, even though the home itself may cost less. Clients call in every month hoping to refinance to a lower rate or hoping to pull out a second mortgage on their mobile home. Unfortunately, those are not available. It's pretty rare to get a significantly low rate I haven't ever seen a second position lien. So there's a first mortgage, and then typically when you get a cash out loan, you can do like a HELOC on a home or a condo. Those are just not available on a mobile home. But the upside is that the down payments for mobile homes are still as low as 5%, and refinancing is available in case you need it. So qualifying for a mobile home loan weighs additional factors when you compare it to a condo or a house. So the age of the home matters. Some lenders won't lend on older homes at all. The space rent also will be included in your qualifying ratios. So the lower the rent, typically, the better qualifying you'll have. And as always, the better your credit and the more down payment you have, the easier it will be to finance the home. So let's talk about the park. So every park is different. Some are rental or lease space parks. Others are ownership parks, structured like a condo or a co-op. These are both considered ownership situations where the risk of future rate increase on the rent is a lot less, and they're deemed as more desirable. You also want to make sure that the rules and restrictions of every park that you look at um, are double checked. You don't just assume that one park is the same as the next park. They have very wide ranges of rules and management styles and that kind of thing. So it's important to talk to the manager. So again, yeah, before committing, you want to drive the parks you're interested in, talk to the park manager and current residents, understand the rules, and get a real feel for the community. All right, now property taxes. A lot of people think that there are no property taxes on mobile homes, and there are some older mobile homes that's true, but a lot of the mobile homes that you will find do have property taxes. However, the property taxes work differently. Mobile homes can carry the lower tax or no tax, while newer homes will have a higher tax. And they're all based on an NADA value, which is kind of like a blue book value for a car or a boat. But this is like for a blue book value for a mobile home. Um, so it can work in your favor that you find an older mobile home that has a low tax rate. So that's really good, or no tax, and they're grandfathered in. So mobile home and manufactured home, they still need a pest or home inspection. Okay, it's just like any other purchase, you need to know what you're getting, right? A well-maintained home is going to last a long time. Just like everything, you take care of it, it'll last, right? And a lot of older homes have been fully remodeled and are in excellent shape. The condition matters, so you definitely want to, get your pest inspection and home inspection done, but don't think that that all mobile homes are in great shape or vice versa, right? So when it comes to the insurance, California has high fire hazard areas you need to be aware of. Standard insurance in those areas simply might not be available at all. Um, there are still some insurance options. So, like in those areas, buyers may get pushed to a California Fair Plan, which is kind of like a bare bones policy, and it's typically only covers fire, lightning, smoke, and explosion, whereas not liability or other damage and contents, loss of use, etc. So typically what a lender will require, and what you should probably do as well, is get a wraparound policy to cover the gaps. And if the home is in a flood zone, you'll need a flood insurance policy. Um, Unfortunately, I had to help a client recently which had bought a mobile home in a park that was a high fire hazard area. He had to get the wraparound policy on the California Fair Plan, and it was in a flood zone. He ended up paying about $6,000 a year. So that's just kind of a fair warning that you need to know before you really commit to a home what kind of insurance is available because it can be outrageous. But thankfully, most mobile homes don't have this situation. This is a really rare, but it was just very interesting to have this happen to a client of mine. So let's give you the 3 steps to start. So number one, you want to talk to a professional, somebody who's done this before. Like myself, I've done this for 20 years. And so somebody who specializes in mobile homes, not just a general real estate agent or lender or insurance agent, somebody that specializes in it. Step two would be to drive the parks and talk to the managers and residents, get an understanding of the rules, make sure that it's something that you can deal with, that you can live in the property and enjoy it. And step three is to figure out what you can afford monthly. As a down payment as well as a monthly payment. That's going to be important to know ahead of time. You don't want to fall in love with a home and then figure out that it's too expensive or that you need a larger down payment or something like that. So getting pre-qualified ahead of time is a great idea. So the buyers who have the smoothest experience in my opinion that I've seen are always the ones that do their homework up front and understand what it is they're buying. And if you'd like to get pre-qualified, you're welcome to book a call with me. I'm only lend in California and do specialize in mobile homes, but I lend on condos and houses as well. You can find my link in the description, and I look forward to helping.